Just wait. Okay, so retirement of a new, or sorry, retirement of a partner, existing partner. Retirement of a partner. Okay, can you tell me why in a running business, okay, business which is making profit, a partner want to retire?
Uh, Maybe disputes between the partners,
Okay, disputes, yes.
or they're old and they want to retire.
Very
Age,
good.
yeah, and or yeah, that's it.
Yes. So there are mainly three reasons. The first one, if the partners are in dispute on any matter, okay, so if there is a dispute between partners, then maybe some of the partners wants to retire to avoid dispute. Okay. The second is they are ill or cannot work like this, so they want to retire. And third, if their age is more or they're old. Okay, so due to these reasons, a partner wants to retire from the firm. Now, if he is retiring from the firm, he wants to retire from the firm, then there are certain conditions that need to be fulfilled before retirement. Yes.
Yes, sir.
Okay. So at the time of the first chapter in partnership, the fundamental of partnership form. So we discussed that without consent of all the partners, a person cannot be admitted in the partnership form. Also, a person cannot retire. A partner cannot retire from the firm. Yes.
Yes, sir.
So if a partner wants to retire, then he need consent of all the partners. Yes.
Yes, sir.
Okay. And also, if he don't want to get consent, okay, then he has to follow the procedure written in partnership deed if there is any. Okay. So let's say if there is some procedure that how to retire from the this partnership firm, then he has to follow those procedure. Okay. So if he follow the partnership deed, then he don't need these consent of all partners. Okay.
Yes, sir.
The third point is there is a type of partnership. Partnership is at will. Okay. So if partnership is at will, then he can send a notice and then retire. In that case, he doesn't have to follow the procedure written in partnership deed, or he has to take consent of all partners. Okay. So if partnership is at will, he can retire by sending a notice only. Is that
Yes.
clear? Okay.
Yes, sir.
So there may be some multiple choice question arise from here. So you need to remember this, that first, either he has to take consent of all the partner, or uh, he should follow the procedure written in partnership deed. But there is a third condition where partnership is at will, then he can retire by sending a notice. Okay.
Yes, sir.
Okay, good. So now, if he wants to retire from the firm, then the main thing, the main point here is to calculate the amount payable to retiring partner. Okay.
Yes. Okay.
So we need to calculate amount payable to retiring partner. Okay. And for that, amount payable to retiring partner. So for this calculation of this amount, you have to adjust your account. Okay, you have to do all the adjustment which we already discussed in change in profit sharing ratio chapter and admission of a new partner chapter.
Yes, sir.
Now, do you remember some of the adjustment that we already discussed in those chapter?
Yeah.
Yes.
Adjustment.
Yes, name of those adjustment.
Is it that sacrificing and gain, that one?
Yes, calculation of sacrificing and gaining ratio. Yes.
Yeah, I remember that.
Okay, so this is the first adjustment actually. So I'm just asking name of the adjustment we have discussed.
I don't remember.
You don't remember the other adjustment? It's like accounting treatment of goodwill, revaluation of assets, accounting treatment of reserves, accumulated profit or loss, adjustment of capital. Yes.
Yeah. Yes, sir.
Okay. So these are the adjustment we have discussed in these previous chapters. Okay. So we need to adjust all those items to calculate this amount. Okay. We have to calculate the new profit sharing ratio, because when a partner will retire, from the firm, then we need to calculate the new profit sharing ratio of remaining partners. Because when a partner is going from the firm, there may be 2 or 3 partners left in the firm, which will who will operate the business in future. Okay.
Yes. Okay.
Okay. So we need to calculate the ratio for remaining partner. The second we value to the form, then he brings
So your voice is breaking.
along with it. Voice breaking.
Yeah.
Clear now? Actually, there are some problem with weather, you can say. That's why sometime it is fluctuating, the network problem.
Yeah. Okay.
Okay, so whenever it is breaking, just tell me. Actually, I will repeat the sentence because it's happening again and again today.
Yeah.
Okay, so see, yes, accounting treatment of goodwill. So when a new partner comes into the firm as a partner, then he brings capital and goodwill. Yes.
Sorry, sir. Can you repeat?
When a new partner admitted into the firm as a partner, then he brings capital and goodwill into the firm.
Yes, sir.
Okay, so if he is retiring from the firm, then he will take capital and share of goodwill. Yes or no?
Yes, sir.
It is as simple as that. That if I'm coming into business, then I will bring these two things, and if I'm going from the business, I will withdraw these two things. Yes.
Yes, sir.
Okay. So the first thing, capital, that he will take his capital from the firm and he will take the share of goodwill. Okay. If there is any past profit or accumulated profit or loss reserves, any profit kind of thing, then he will take his share from those profit or loss also. Okay, it will be added or deducted from his capital. So reserves, accumulated profit or loss adjustment is also required. Then last one is the revaluation. We need to adjust revaluation profit or loss because at the time of his working, assets or liabilities value may increase or decrease, okay, with the time. So that's why we need to calculate the profit or loss on revaluation, and then we have to give him the share in revaluation profit or loss. Okay.
Okay, sir.
Okay, good. Now, the last adjustment that we have done in previous chapter is uh, capital adjustment or adjustment of capital, you can say. So, adjustment of capital means we have to adjust the remaining partners' capital in their new profit sharing ratio. Okay, they may demand that their capital should be equal to their profit sharing ratio, or capital should be in proportionate to their profit sharing ratio. Okay, so if any partner demands that and other partners agrees, then we have to change their capital. Okay, so as per the information given in quotient, there may be two or three situations related to adjustment of capital. We need to adjust the capital of remaining partner. Okay, there is only one additional adjustment required in this chapter because as I told you, these adjustment, it is already discussed in previous chapter. We have discussed the uh, gaining sacrificing ratio, new profit sharing ratio, goodwill, reserve, accumulated profit or loss, revaluation of assets, and adjustment of capital. Okay, these are already discussed. So the only adjustment we need here is amount payable to retiring partner. Okay, so I'm not writing all those things. I will discuss you with the previous chapter topic. Okay, and we will adjust as per this chapter only. So the first thing is I told you condition that consent of all partner. I here written consent of all partner is required, or procedure as per partnership deed. These are condition. Okay, so these are condition we need to discuss here. So consent of all partners is required, procedure as per partnership deed. If partnership is at will, then we will only send notice. There is one more thing, liabilities of a retiring partner. When a partner is retiring from the firm, there is a portion like he can start a competitive business or not. Can you tell me?
Yeah.
If a partner is retiring from the firm, he can start a competitive business or not?
On his own, right?
Yes,
Yeah, he can.
yes, he can.
Yeah,
But
because he has experience previously as well.
yes, but there may be a situation where he take customers of the old partnership firm.
Yeah.
So is it possible to start a new competitive business?
No.
No. Okay, actually, the answer is yes, he can start a competitive business, but if there is anything written in partnership deed regarding this, then he will not able to start a competitive business.
Okay.
Okay, so retiring partner can start competitive business. Okay.
Yes, sir.
The second thing, a retiring partner, or if let's say a partner retires, I'm taking an example here, retires on, let's say, 30th September 2020, okay, and amount payable to him is 3 lakh. Amount payable to him is 3 lakh, but it is not paid at the time of retirement. Okay, so it is paid on 31st March 2021. Now tell me, will a retiring partner will get anything from the firm for this delay?
No,
No.
I don't think so. Because
If
he's already retiring, right?
yes,
Previously.
he
Yeah.
is retiring, but partnership firm did not pay his due amount.
But then, yeah, he will get
What?
maybe like a compensation extra.
He will get interest. Okay.
Okay.
It is this amount. If it is not paid at the time of retirement, it is treated as loan. Okay.
Yes, sir.
And if there is no mention of payment of this loan, then we have to pay the interest on this loan at the rate 6% per annum
Yes, sir.
up to date of payment. Okay. And if a partnership firm is not going to pay the interest, then the division of profit will be done. Division of profit means share in profit will be given to retiring partner up to date of payment. Okay.
Yes, sir.
So there may be two situations. The first, either interest at the rate 6% per annum will be paid to retiring partner, or share in profit, okay, up to the date of payment.
Yes, sir.
Okay. So these two, it's rights of the partner, you can say. Rights of partner. Now, what is the liability of the partner here? If a partner is retiring, then he should announce that he is retired from the firm. Yes,
Yes, sir.
you should tell other people that you are retired from the firm. If you don't tell the related person who knows you that you are related to the firm, then they can do their business on uh, on behalf of obviously their firm, because they are doing business with you. Sometimes people are attached with not business, people are attached with the partner. Okay, and if the partner is retiring, then he should tell the other person that he is retired from the firm now, so he is not responsible for anything happens in the firm. Okay.
Yes, sir.
Because let's say one teacher is operating a coaching institute, okay, and some of the students are studying in that
So your voice is breaking.
Okay, so I'm writing this. Actually, it's bad weather. That's why the problem is. Okay, so rights to, sorry, not rights, we already discussed, it's liabilities of partner. Okay, liabilities of partner to announce that he is retired. Okay.
Yes.
Okay. So if he announced this and any loss occur to third party, then he is not responsible. But if he don't do this, don't do the announcement, then any loss that will occur to the third party, he is liable in that case.
Yes, sir.
Okay. The second thing is a partner is liable for the actions of his past. Okay, so for any past actions that he has done on behalf of the firm, he is liable for that action. He is liable for those liability who at the time of his being a partner is liability for the firm. Okay, so let's say he retired. I told you that on 30th September he retired, and at that time there is a liability of 2 lakh rupees. Okay, liability of
Yes.
2 lakh rupees, and there is no announcement of his retirement, no announcement. Then in that case, if any loss incurred to that liability, then the retiring partner is liable to pay any compensation that is required to be paid. Okay,
Yes.
my voice is clear.
Yeah. Now it's clear.
Okay, so if a partner is retiring from the firm on any date, and before that there is any liability, okay, so he should announce his retirement. But if he is not able to do so, he cannot uh, do the announcement, then in that case, he is liable to pay any compensation or loss incurred to that liability. Okay.
Yes, sir.
So these are liabilities of partner, rights you already know. Now we go to the practical part here. These are the theoretical part. So the first thing was condition. The second is rights of the retiring partner. The third is liability of a retiring partner. Okay.
Yes.
Is there any doubt in any of these topic?
Clear.
Okay, good. Now, the if a partner retires from the firm, okay, so I told you that he is yes, calculation of amount payable to retiring partner. You can see here.
Yes.
Good. So what are the amounts? What are the items written here?
Capital, share in goodwill, share in
Yes.
reserves,
Share in
accumulate
reserve,
afterwards.
profit or loss, share in revaluation profit or loss, and drawings, interest on drawings, interest on capital, salary, or commission. Yes.
Yes, sir.
So maybe quotient can give you these all items, or they can give some of these items. Okay, so you have to do the quotient accordingly. So the first thing is capital. It will be given in the quotient. Share in goodwill. If it is given, then you have to adjust the goodwill. But before doing any of these things, we need to understand the calculation of a new profit sharing ratio or gaining sacrificing ratio, because if a partner is going from the firm, then he is sacrificing his whole ratio. Yes or no?
Yes, sir.
Yes. So retiring partner will sacrifice his whole profit share. Now, if he's sacrificing his whole profit share, then someone will get it or not?
Yes, sir.
Okay. So there may be 2 or 3 situations. Let's say the first case is A, B, and C. There is 3 partners, and question says that B retires. Okay, their old profit sharing ratio is 3:2:1. Can you tell me what will be the new ratio here?
3:1.
3:1. Very good. So the answer is simple. There is no other information about ratio. That's why the new ratio is 3:1. And what will be the gaining ratio here?
I don't know. Gaining old profit minus new profit. That's the formula, right?
Yes. Old profit share minus new profit share. No, actually, it is just opposite. It is sacrificing ratio. Gaining means new profit share minus old profit share.
Uh,
Yes.
3:1, right?
Yes, their old ratio is also the gaining ratio. Okay, so in this case, the new ratio is also 3:1, and the gaining ratio is also 3:1.
Yes.
Is that clear to you, or should I solve the question to understand?
So can you solve the question?
Yes. Okay. So A and C are remaining partner. Yes. So A old ratio was 3/6, but a new ratio is 3/4, and C new ratio is 1/4. Minus 3/6 old ratio minus 1/6. So 12, 9 minus 6, 3/12, and here 12, 3 minus 2, 1/12. 3:1. Is that clear?
Yes, sir. Clear.
Denominator is 12, so we removed the denominator. Whenever the denominator is same, we can convert the fraction into ratio by removing.
Yes,
Okay.
sir.
So this is the first case of this ratio type question. Okay. The second case can be given like this: A, B, and C are partners. Their profit sharing ratio is 3:2:1. Okay, and it is said that B retires and A and C is getting his share in share equally. Okay.
Yes, sir.
Okay, so B retires and A and C is getting the share of B in equal proportion. So in that case, Actually, if it is given in a ratio form, okay, so it will be like this: 1:1. Okay, so first in this case, you have to multiply this ratio with B share. So A gain and C gain 2/6 into 1/2. If it is 2:1, then it will become 2/3. Is this clear to you?
Yes, sir.
Okay, so 2/6 is to 1/2. This is very simple. That's why it is 1/6 and 1/6. Okay.
Yes, sir.
Okay. Let's change this a little bit. Now, if the gaining ratio is 2:1, then the ratio will be 2/6 into 2/3 and 2/6 into 1/3. Yes.
Yes, sir.
So it will be 4/18 and 2/18.
Yeah.
So now you have calculated the gaining ratio of each partner. So now we can calculate new ratio. A and C. To calculate new ratio, you add the gain in their old ratio. So old ratio was 3/6 for A and 1/6 for C. So you will add, if in first case, you will add this 1/6. 1/6 plus 1/6. It will be 4/6 here and 2/6 here. So the new ratio will become 2:1. Or 4:2, you can say. So 2:1.
Yeah. Yes, sir.
Okay, good. So case 3. Case 3. If, let's say, the retiring partner sacrifice his share to any one partner. Okay.
Yes, sir.
Then in that case, what will happen?
If they don't sacrifice.
Yes, if the retiring partner don't sacrifice his share to other partner, only one partner, he's sacrificing his share or give his share to only one partner.
Then neither of them will get it.
Neither one.
No, like you said, he will only sacrifice his share to one of the partners.
Yes, one of the partner.
I don't know. Maybe they have to share it equally.
Let's take example for this.
Yeah.
Actually, okay, A, B, and C are partners. Their profit sharing ratio is 3:2:1, and B sacrifice his share to C. Okay, he is giving his share only to C. Okay.
Yeah. Yes.
Any one partner. I told you any one partner.
Yeah.
So
I think then it will be 3:3 because he's giving his share.
3:3.
Then
Okay. Yes, this is very simple here actually. You have seen this 2 and 1 is to 3. Yes.
Yeah. Then.
But if it is, let's say, 5 is to 3 is to 2, no, it is also very simple.
Yeah.
Okay, understand by this example. 3 is to 2 is to 1. Okay, so you added the ratio of B into C. Yes.
Yes, sir.
Yes. So this is how we solve these type of question. Means if any single partner is receiving the share of retiring partner, in that case, we will add the retiring partner share to gaining partner only, not to A.
Yes, sir. So
Okay.
can you repeat?
Yes.
The voice cut.
B share will be added to the share of C only.
Yes, sir.
No, not with A. A will not getting anything from B. That's why A share will remain same.
Yes, sir. So no change in A.
Yes, no change in A share.
Yes.
Okay. Now, sometime the question will give you fraction like 1/3 of his share, like this, and 2/3 of his share. So you have to see this sign. Okay, there is two type of portion, about sacrifice. So the first type, in first case, there is this line written from his share. Okay, and in second situation, of his share is given. Okay,
Yes, sir.
so if the question says this line to you, in that case, it is sacrifice of, sacrifice of retiring partner, but we are talking about gain here. So it is gaining ratio or gain of a remaining partner. Okay,
Yes, sir.
but in that case, in of his share case, you have to multiply the fraction given in quotient with retiring partner share, retiring partner profit share, and then you will get your gain of that partner, and then you add. Okay.
Yes, sir.
Okay. uh, Actually, you have to calculate this on your own so that it will be easily understandable. Okay, so I'm giving you a question here. A, B, and C are partners. Their profit sharing ratio is 5:3:2. Okay.
Yes.
Okay. Now B retires. B retires, and A A gets 2/3 of B share, and a remaining share is taken by B. Can you calculate the new ratio? In this case,
A goes to the share is taken by B. Yeah.
Okay.
We have to
What?
make the denominators equal.
Yes. To convert it into ratio, we have to make denominator equal.
Yeah. It's so then it's 2 by 3 minus 2 by 10, the total, right? Of the total of the profit sharing ratio and
Actually, if you are calculating it only verbally, then maybe you are not able to solve this. So please do it on paper.
so is it 2 by 3 minus 2 by 10, the total of the profit sharing ratio?
No, I'm just asking what will be your new ratio?
5 is to 3, 5 is to 2.
5:2.
Yeah,
You sure?
yeah, because B is retiring, right?
Yes, B retires.
5 is to 2.
Okay, actually, I told you here that if of his share is given in portion, then in that case, you multiply the fraction with retiring partner share. Yes.
Multiply the fraction having share. Okay. Yeah,
Have you done this?
no.
So that's why I'm saying it to you that please do it on paper. Okay, should I solve it?
Yeah, I'm also doing it.
Okay, so please do. After that, I will solve.
We need to make the denominators equal for multiplication also.
No. Actually, whenever you want to convert the fraction into ratio, then
Yeah.
okay, when you have calculated the new ratio and it is not equal, the denominator is not equal. In that case, you have to make the denominator equal.
Yeah. Is it 4 by 30?
4/30.
Yeah.
No, actually, I don't think that is correct.
I did 2 by 3 into 2 by 10.
2/3 into 2/10. Why 2/10?
Because multiply it with the B share, right?
B share is 3/10, I think.
Okay, yeah, 3. So then it will be 6 by 30.
6/30.
So then 6 ones are 6. 1 by 5.
Yes, it is. It is sacrifice of partner. Yes.
Yeah.
Oh, sorry, gain of partner, gain of A. Yes.
Yeah.
So what will be the gain of C then?
The remaining.
Yes, remaining.
Uh,
Okay, let's see.
yeah.
B share unit is 3/10.
Yes, sir.
Okay. Now gain of A and gain of C. So 3/10 into 2/3 because he is taking 2/3 of B share. And if you have studied it in 10th or 9th, of means multiply. Yes.
Yes, sir.
Okay. So 3/10 into 2/3, you will get 2/10 or 1 by 5, you can say.
Yes, sir.
Okay. Now, if we 3 by 10 with the remaining share is taken by, C. The remaining share is taken by C. It means if 2/3 is already taken, then the remaining share is 1/3.
Yes.
If 3/4 is already taken, then remaining will be 1/4. You need to understand that 2 by 3, if it is given, then 3 is a whole number, and in that 2 parts are already gone. So the remaining is 1 by 3.
Yes, sir.
Okay. So 3 by 10 into 1 by 3. So it will be 1 by 10. Okay. These are gain of partners. Now we have to add these gain in their old ratio. So we will get new ratio. New ratio of A old ratio was 5 by 10. Yes. And C old ratio was 2 by 10.
Yes, sir.
Plus 2 by 10 of A and 1 by 10 of B. So it is 7 by 10 and 3 by 10. The new ratio is 7:3. Is that clear to you?
Oh, sir, can you repeat it?
If you have any doubt, you can ask, because we have completed our
No, I
new.
didn't understand this new ratio. Can you repeat this?
What?
Where did this 5 by 10?
5 by 10 is their old ratio. 5:3:2.
But B retired, right?
Yes, be retired. So their old ratio was 5:10. I'm
Yeah.
not saying that it is new ratio. Their old ratio is 5:10. Yes,
Yes, sir.
3 by 10 and 2 by 10.
Yeah.
So old ratio plus gain is
Yeah.
ratio.
Yeah, now I got it.
Okay. So this is how you solve the quotient of his share like quotient. Okay.
Yes, sir.
So this is our new profit sharing ratio, gaining or sacrifice ratio. Now goodwill. Goodwill. So we know the valuation part, and we also know that goodwill, if it is existing goodwill that is appearing in the books, then we have to write off the existing goodwill, write off the existing goodwill in old profit sharing ratio. Okay.
Yes, sir. Sir, actually, my net is really bad. I think I have to rejoin.
Actually, it is not showing that internet connection is unstable now. So
No,
maybe.
not yours. Mine. It's disconnecting.
Okay. Okay.
I'll rejoin one. I'll restart.
Okay. No
Yeah.
problem.
Hello, sir.
Yes, Aditya.
Yeah, so my internet's bad.
It's not working.
No, it just says internet connection unstable.
Okay.
But I can hear you. Yeah.
Just wait 1 minute. Actually, my headphone is disconnected.
Yes.
Okay. So my voice is clear to you?
Yeah, it's breaking sometimes, but I'll tell you.
Okay. So I was saying that if there is any existing goodwill given in the question, or it is said that goodwill appearing in the books, okay, in that case we have to write off the old goodwill or existing goodwill in their old profit sharing ratio.
Yes.
Okay. After that, if there is a new goodwill or goodwill valued at, okay, if this is given, in that case you have to calculate gain or sacrifice of part. You have to calculate this, and then you will calculate the share of retiring partner. You will calculate the share of retiring partner, because the retiring partner is sacrificing his whole share of profit. Okay, that's why we will multiply this goodwill with the retiring partner share of profit, and that goodwill share will be compensated by gaining partner. Gaining partner will compensate will compensate the retiring partner. Okay.
Yes.
Okay. So only gaining partner, you need to remember that, because if one partner is not getting anything from the retiring partner, then why he will give compensation to retiring partner? Because I am not getting anything from you, then why will I pay any amount to you?
Yes.
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 So that's why if goodwill valued is given in the quotient, then you will calculate gain or sacrifice of each partner. Okay. And you will pay the retiring partner in gaining ratio of remaining partner. Okay. So gaining partner will compensate the retiring partner in gaining ratio. Okay. Is this clear?
Yes, sir.
So if the question say only goodwill or goodwill is valued at, okay, in that case, we will adjust that goodwill in gaining sacrificing ratio. And if there is any adjusting goodwill, then it will be written off in old profit sharing ratio.
Yes.
Journal entry for adjusting goodwill is, the journal entry for goodwill from previous chapter.
That average profit.
No, journal entry.
All
Do you remember the journal entry?
partners capital to goodwill.
Just see here. Yes. This is the journal entry. Gaining partners capital account debit to sacrificing partners capital account.
Yes.
So at the time of retirement, there is one sacrificing partner who is retiring. Okay. So you can write in case of retirement, you can write here retiring partners capital account. Okay.
Yes, sir.
The journal entry is here. Gaining partners capital account debit to sacrificing or retiring partner capital. Sometimes some of the remaining partner also sacrifice their share. That's why I have written sacrificing also.
Yes, sir.
Or retiring partners capital. Do you try to solve the question, multiple choice portion of your book?
Not really. Sometimes.
Not yet. Actually, please try those questions already given in your book, because if you will try those questions and if you don't understand any question from your book, then you can ask that question in next class. Okay, so
Yes.
there will be no doubt related to that concept.
Sure, sir. I'll do it.
Okay, because I'm teaching you right now, and I'm teaching with actually my mind. Okay, but I'm not understanding what's your problem areas are. Okay, so if you tell me that you are not able to solve those questions, then I will try to teach you that.
Yes, sir.
Okay, so please try to practice some of the question, because it will help you in your CUET examination.
Yes, sir.
Good. So if we have to write off the existing goodwill, then the entry will be partners, all partners, not retiring, not remaining, all partners capital account debit to goodwill account, existing goodwill actually. So this is our goodwill part. The next topic is reserves accumulated profit or loss. Accumulated profit or loss. So the reserve, accumulated profit or loss are related to past. Okay, that's why we divide these in old ratio between all partners. Okay, it is not related to only remaining partner or retiring partner. It is related to all the partners, because all the partners have made efforts to earn these profits. Yes or no?
Yes, sir.
Yes. So everyone should get it.
Yeah. Everyone.
Yes. So if a retiring partner, if a partner is retiring from the firm, then he will demand that the share in reserves, accumulated profit or loss up to date of his retirement should be paid to him, and all the partners will have to pay the amount. Okay. So
Yes.
this will be divided in old ratio.
Yeah.
Okay. You remember the concept workman compensation reserve or investment fluctuation reserve?
Yeah. Workman.
Yes. Both are actually related. If you understand one of these, then the other will be easy. Okay. So we have discussed that concept in change in profit sharing ratio chapter. Okay. So if you don't understand any concept or you forgot about it, then you can watch the video. Okay.
So your voice is breaking.
Your voice is breaking again. Is it clear now?
Yeah, now it's clear.
Okay. So workman compensation reserve and investment fluctuation reserve is similar topic. If you understand one, then other will be easy for you.
Yes.
And we have discussed that in our change in profit sharing ratio chapter.
Yeah. Yes.
Okay. So reserve, these balance should be divided in old ratio. Okay. So reserves, accumulated profit or loss, we have to calculate the share. If a question asks you to calculate only amount payable of retiring partner, then you don't need to distribute this between all partners. You just calculate the share of retiring partner and write into their capital account.
Yes. Okay.
Okay. After that, revaluation profit or loss. You remember the journal entry of revaluation?
One
A revaluation profit or loss. You remember the journal entry?
second. So
Okay. Should I repeat?
yeah.
Okay. Okay. Just a minute. Actually, I have to show it also.
So you asked the journal entry for reserves and accumulated profit.
No. Actually, reserve, accumulated profit or loss journal entry is similar to the previous chapter.
Is it for transfer of reserve, that general
You can
reserve?
see here.
Yeah.
Yes.
I wrote this down.
These. So if there is any loss, then the partner's capital account debit to profit and loss account to deferred revenue expenditure account.
Yes, sir.
Okay. Actually, uh, okay. So this is your revaluation concept. You can say this revaluation
Not yet. It's still the same.
journal entries.
Yeah. Now it loaded.
Yeah. So the first is for increase in value of assets.
Yeah.
It is assets account debit to revaluation account whenever there is any increase. Actually, a revaluation account is a nominal account. Okay. And whenever there is any profit or loss, we have to debit or credit accordingly. Okay. So revaluation account will be debited when there is a loss, and revaluation account will be credited when there is a profit.
Yes.
Okay. So in this first transaction for increase in value of assets, let's see if there is 50,000 rupees worth of furniture you have. Okay. So, and it is now increased by 5,000. The value of furniture is increased by 5,000 and now it becomes 55,000.
Yes, sir.
Can you tell me it is profit or loss for you?
Profit.
Profit. That's why a revaluation account is credited here. Okay. And whenever there is any increase in assets, asset account is debited. If there is any decrease, then asset account will be credited.
So your voice. Your voice
Network issue.
Yeah.
Actually, I'm not able to understand because it is not showing here. First time, it is shown that your network is fluctuating or unstable. Okay. But it is not showing after that.
No, it's
So,
like your video gets it's frozen, and then after 2 minutes it starts again, and then like it goes in fast forward. Yeah.
okay. So,
Yeah. I can hear you.
if you say we can continue this balance part, if the problem is okay, if there is still problem, then we can continue our this part in next class,
Yes.
and we can cover this. Otherwise, if my voice is clear or my video is good, then we can continue.
I mean, I can hear you. Sometimes it's just breaking. Plus, my
So,
internet is not the best either. That's why.
so should we continue?
Yeah, that's okay.
Okay. So for increase in value of assets, actually I'm writing it so that you can understand. Okay.
Yes, sir.
Whatever I will speak, I will write the important parts here. So for increase in value of assets, whenever we talk about assets, if there is any increase, then it is debited. And if there is any decrease, then it is credited. And revaluation account, this revaluation account is a nominal account. A revaluation account is nominal account. So the rules of debit credit says that debit all expenses and losses, credit all income and gains. So if there is any increase in value of assets, okay, let's say there is a furniture you have of rupees 50,000, and now it becomes 55,000. Is it profit or loss? Is it profit or loss? Are you able to listen? Am I audible to you, Aditya?
Hello, sir.
Yes, Aditya.
Oh, my net is bad. I think we should do it next class.
Yes, I think so. Okay, no problem. So we will continue our this topic revolution in our next class, and then we'll move further.
Yes, sir.
Okay, thank you. Bye bye.
Bye.